different in different markets, and as we'll show, even within a market, it can be substantially different for different products. Now, online penetration, a lot of we hear about regulation being the key driver. We don't feel that's the case. It's actually more about culture and geography. If you look at Norway, no one's going to say that Norway has a great liberal online regime, but it has high penetration due to cultural reasons. If you look at Italy, which does have, down at 11%, does have what is viewed as a fairly good open regime, been going a long time, but it also has a very large land-based sector. Netherlands there at 25%. The reason we've taken 2019 is not because I couldn't be bothered to update it, but because 2020 and 21, the online penetration is significantly increased because of the land-based closures. However, regulation does have a big impact on onshore channelization. So as we saw, Europe, 79%, EU 27, just a bit below that. The main reason for that is just because of the UK, bringing up the rest of Europe. Netherlands, obviously that's because you've only got a quarter of the year where you've got the market opening. But if you look at markets such as France, Poland, you've got still a fifth of the market offshore. France, you have no online casino. Poland, you have a monopoly onshore casino with advertising restrictions. Although I agree that it's a good start being around the 75% that we're talking about at the moment for the Netherlands, it's not something which you say long-term is a good number. We talk about being in the 90s as a number that you look to aim for. Obviously, ideally be 100, but really when we talk about regulation or what we view as good regulation in terms of channeling, we're looking around the 90% mark. So how do you apply this to the Dutch market? Well, first of all, pre-regulation. That's a starting point, and we're significantly larger than we had previously estimated. Our estimates for 2020 and 2021 are actually over 50% higher than they were this time last year, which for a data company isn't something great, but it is what it is. Our assumption was that the market growth was going to slow substantially when operators stopped marketing and actively targeting the Dutch market. But what we found, this wasn't the case. And then it further got muddied when, at the end of September, early October, a number of the operators pulling out the market gave the impact on earnings. And we're seeing things such as Kindred had 40% of revenues coming from Netherlands because it was losing 40% of earnings. But that's not the case. However, fortunately, we have had more clarity from operators since then. So we estimate that Kindred, and again, this is an estimate, so anyone from Kindred in the crowd shouting at me and saying it's not exactly true, their average monthly revenues, we believe, increased by 22% in 2020 and by 50% in 2021. Now, what we do know, and then the market leader, was that Netherlands was 23% of group revenues, and that's 89 million and 105 million, respectively, in Q4 20 and Q1 21. So we did see significant growth during the COVID period, despite the fact that these operators were not actively targeting the markets. So putting this into the market size, we now forecast that the market pre-regulation, or in the year of regulation, was 918 million euros, of which 185 million was the onshore market when it launched. We forecast this to grow to 1.1 billion this year and getting up to 1.7 billion by 2027, of which over 1.5 billion of that will be onshore revenues, but there will still be an offshore component to the market. So we estimate that 24% of the market will remain offshore this year. That's consistent with the survey that was talked about earlier, showing 22% of customers continue to use offshore sites. However, the offshore portion of the market should decrease as more operators get licensed. However, that is dependent on any changes to regulation, and adverse regulation could see a significant offshore market remain depending on what gets put in. So, market share. Our estimates of the market share shows that Toto was the early market leader with around 35% of revenues, followed by Holland Casino at 22%, with BetCity and Bet365 also generating strong market share. This is based on the first quarter. The Holland Casino and Toto revenues were actually reported, as was the market size, so therefore they should be correct. And we had confirmation when Entain said they're buying BetCity that they had 20% market share, so we feel pretty confident with the rest of them. We then decided to look at Q1. Before that, that's the overall market share. Obviously, gaming and sport are very different. So with Toto having 35% and Holland Casino having 22%, however, when you look at sports, Toto has well over half the market, and Holland Casino has almost 40% of the gaming market. So the market share in the different segments can vary significantly. Looking at Q1, basing this on web traffic analysis, we believe the early market leaders, who happen to be the incumbent land-based operators, have lost 10% of market share between them. The market has obviously grown, well, in our eyes has grown in Q1, but you're seeing a drop from Toto and Holland Casino in terms of market share, which could be in line with what was talked about marketing by Holland Casino earlier today, while BetCity and Bet365 have started to increase their share. Obviously, we've got Kindred, who have just been licensed, and other operators still to enter the market, so we could see market share look very different in 12 months' time than what we do today. It is normal that the market in the first few months or even few years of opening will look very different to 5, 10 years down the line, as we have seen in all other markets. So, regulatory impacts. Clearly, there are three contrasting parts to the regulation. You've got the government, who wants taxation, player security control, operators who want some form of market protection, want licensed and at some point make profits, and players, they want value, choice and protection. Now, some of these coexist quite nicely. I think that all players want protection, operators want players to have protection, government wants players to have security, but there are also areas where operators, players and the regulator aren't necessarily pulling in the same direction. But there's a number of factors that we must consider when forming regulations, and we'll try and look at some of the factors some of the regulatory impacts that have changed in other markets. So the most prevalent categories of regulatory change that we've seen in the last couple of years in Europe, and there are many different forms of and nuances of regulatory change. The state limits and product restrictions. So staking limits, you're looking in markets such as Germany's introduced state limits, which saw significant change. Product restrictions can range from France not allowing online casino, or from a market such as Sweden, which decides it's not going to allow betting on certain betting products such as fouls, etc. So it can be a wide range to quite niche. Marketing restrictions. Now, I don't want to go too much into marketing, not least because there are people a lot more qualified in Brigitte panel later who are going to talk about it, and I don't want them to completely contradict. But marketing has such a wide range. So what's important for marketing is that players are able to see who is onshore. And so there's not a blanket marketing restriction. They need to tell, if they don't know who's an onshore operator and who's an offshore operator, how can they play with onshore operators? But you're getting a move away from marketing and advertising that have incentives or inducements to bet. So an advert coming up in the middle of the day saying, Rooney to score 10-1, bet now, $1,000 free bet, is very different to an advert which is showing that a Bet365 is an onshore operator and is therefore safe to bet with. So marketing has a huge array of restrictions that can be in place, some of which are arguably beneficial for the players and for the market as a whole, and some are going to drive players offshore, or at least not inform them enough to be able to make the decision to go with an onshore operator. Deposit restrictions, again, these are twofold. You can have ones where there is voluntary restrictions or mandatory, but the player choice. So when you set up an account, you have to choose what level of restrictions on your play on deposits. There are other ones that are put in which are mandatory deposit restrictions, where it doesn't matter how much wealth you have, how much you want to play, you are only allowed to deposit a certain amount per day, per week, per month. And this can be for single operators or across operators. And finally, tax rate. Now, we think with 160 markets covered, we'd be able to say, if you introduce a deposit restriction, this is the impact, but there are a lot of other drivers, so it's hard to isolate the impact of any one change, but we'll give it a go. So looking over the last couple of years, Denmark has seen very low growth compared to other markets. In 2020, it had significant restrictions on promotions. It had players needed to set mandatory deposit limits, and then in 2021, there was an increase in tax from 20 to 28%. Sweden, during the pandemic, saw the introduction of temporary deposit limits, bonus limits, and restrictions on some bet types. As you can see, when you've got the different restrictions coming in place, trying to isolate each one becomes difficult. And Spain and Italy both had marketing restrictions, although the dynamics of the markets have seen a very different outcome from these two markets in terms of growth. So if you look at the growth over the past 2 years, this is a CAGR, so this is average compound growth over the 2 years. If we look at Denmark, first of all, Denmark, 8% growth over the 2 years. Now, clearly, all these growth rates have been boosted by COVID. The average we're comparing it to is 35%, so that is the average of these markets, excluding Spain, Sweden, and Denmark, which have their own restrictions in place. So Denmark, the impact has been 8%. The majority of that was from the deposit and bonus restrictions. There was also an impact when the tax rate increased, but it was more on the restrictions. Sweden, 11%. Again, in a normal year, you'd think 11% growth of the onshore market is a fair number. However, compared to others, when you're seeing the benefit of COVID, it is substantially lower. And Spain at 4%. Now, Spain, if you look at Spain at 4% and Italy at 41%, both had deposit marketing restrictions. What's the difference? First of all, Italy came from a very low base in terms of online. It has a very large land-based sector, so although it's a well-established market, online penetration is low. So therefore, when the land-based closed during COVID, the online increased substantially more than you see in other markets that had a more established online market. Secondly, Spain has been impacted because there seem to be structural issues with its gross win betting margin. Horse racing gross win margin was actually negative. Sports betting margin was very low single digit. And if you look at sports turnover and gaming, the underlying market has still actually remained pretty strong. So that 4% number, I would say, is artificially low and not a reflection of the underlying growth in the market. So Sweden, over those 2 years, the market size is 32% lower than it was in the other countries we compared it to that didn't have any major regulatory change. And that's through the implementation of deposit restrictions during COVID and bonus limits. In Denmark, the market is 36% lower than countries without regulatory change. The majority of that is from the implementation of players having to set mandatory deposit limits, but we think mainly restriction in bonuses. And then there's the increase in tax from 20% to 28% had a further impact in 2021. Now, Spain and Italy is saying that actually promotional restrictions on bonusing had a significant impact in Denmark, but the headline marketing restrictions don't appear to have had as much of an impact. Say Italy benefited from relatively low online penetration, and Spain's had its own issues. But let's not forget, these markets have been open for a decade. People know who the onshore operators are. It's not like a new market where suddenly players are being presented with all these brands offering product and they don't know who's onshore, who's offshore. So they are very different, and that needs to be taken into account. So as we've seen, our view is that headline advertising is not necessary for market growth. However, we think that there is an element of advertising that needs to be available in order for the consumer to make a choice to move onshore. So it is relevant for channelization. So 3 minutes left. I just want to give a quick illustration of what happened in Denmark. We're fortunate to get data from operators, quite detailed data, to do a report that was commissioned. And this report was made public, hence I can share the data with you. So the effects of regulatory change, not all players are equal. And taking averages is useful, but it slightly clouds things. So there was a restriction on promotions. That was the amount of promotions and how they're able to be used. And what we saw was this had a disproportionate impact on higher value players, higher value being higher spending players. So the overall decline in Q1 2020, and this was before the impact of COVID where the whole market got buoyed, was down 17%. However, the more sophisticated players who actually look at this and compare the value of bonusing across operators, their value fell by 30% year on year as soon as these measures got introduced, of which 12% was a reduction in players, 18% reduction in spend of these players. So with the 18%, you could argue that they just reined in their play. However, the 12% reduction in players, they are not players who suddenly decided that they were going to stop gambling. And I think it's fair to assume that those 12% of players all shifted to offshore sites. So 17% decline overall from the commercial operators, but the behaviour of the recreational versus more sophisticated player is very different. Then we looked at the Danish market in terms of tax rate and the onshore channelization. And we had over 90% onshore channelization at 20%, and as it moved up to 28%, we've seen that decline to about 87%. So there is an adverse relationship here between the tax rate on the x-axis and the onshore channeling on the y-axis. Finally, Germany. This is one where they introduced legislation which made it highly restrictive for online gaming, got rid of table games, and also imposed strict limits. And what we saw here is the offshore gambling site, and we view all operators were offshore at the time, but we split it between sites who were looking to get licensed and were therefore complying with the new regulations, and those who weren't looking to get licensed. And when you have significant restrictions, we saw that the traffic tripled on these sites who weren't complying with the regulations compared to those who did. There's a clear shift that consumers wanted the product and wanted to wager a certain amount and shifted offshore. And then finally, even within a market, you can have significantly different levels of channeling rates. So it's not just a cultural thing, it is purely down to the regulations. So in Poland, you've got an open commercial online betting market, and you've got over 90% of the market onshore. For the gaming, there's a monopoly where there's very restrictive advertising, and you've got 50% of the market onshore. So same consumers, just different regulations for the two different betting gaming products and very different channeling rates. As I'm out of time, quick conclusion. Global market fully recovered, online penetration is higher. Netherlands, the pre-regulation, the market was substantially higher, and although a significant offshore market remains, this should reduce. Regulatory change, deposit limits, stake limits, bonus limits seem to have the largest impact and shift players offshore. Marketing restrictions have less of an impact, depending on being able to see which is the onshore and offshore operators. And the impact is not felt equally. And when looking at these restrictions, we need to look at the behaviour of high-value players as well as the casual player, and not just an average player. But thank you very much.
Thank you so much, Ed. Oops, please stay on the stage for a second. Any questions from the audience? Time for a quick question. Methodology, what is the main methodology you use to come to some of these conclusions?
So in terms of the market growth, we look at what's happening in other markets. We look at the restrictions or the framework in place.
Yeah.
Restriction sounds too negative. The framework in place, look at the market size before regulation, number of operators there, and web traffic analysis as well is also very helpful in terms of tracking the offshore market.
Okay, great. Ed, thank you very much for coming to Amsterdam, and see you later during the lunch.
Yeah, thank you, Willem.